Okay, folks, welcome to Red Pill Markets. Today is March the 12th, 2020. So this morning, we're going to go over Putnam Stable Value. You always hear me talk about Putnam Stable Value. We park our money there when we think the market is going to fall. We do anticipate the market continuing down maybe another 20 to 30% this year. So I do believe Putnam Stable Value is a money market fund. So let's go over this real quick. What is a money market fund? A money market fund is a kind of mutual fund that invests only in highly liquid instruments such as cash equivalent securities, and high credit rating based securities with a short-term maturity, less than 13 months. As a result, these funds offer high liquidity with a very low level of risk. Okay. So let's just go to the summary real quick. Okay, so the key takeaways. A money market fund is a type of mutual fund that invests in high quality short-term debts, cash and cash equivalents. Though not quite as safe as cash, money market funds are considered extremely low risk on the investment spectrum. When markets are falling, you don't want to lose all of your investments. So put it into a Putnam Stable Value or any type of stable value fund that'll keep you from losing as much. Actually, you'll gain a little bit while everybody else is losing. Okay. A money market fund generates income, but little capital appreciation. When the markets are falling, it's hard to concentrate on growing your money when everything is falling. So you just want your money to stay about the same level. Then when everything stops falling, then you move it over to the more risky assets when you believe the market is done falling and starting to go up. Money market funds should be used as a place to park money temporarily before investing elsewhere or making an anticipated cash outlay. They are not suitable for long-term investments. Only reason to go into these funds is if you want your money to stay the same. If markets are falling like crazy, if they go up 6% one day, down 7% the next day, up 8% the next day, down 9% the next day, you don't really want to trade in those markets unless you're a very highly skilled trader. And even a lot of those traders get butchered trying to trade those markets. So one sec. Okay, so I actually pulled up a fact sheet about Putnam Stable Value. There's many types of stable value funds, but for our investment plan, we can only choose Putnam Stable Value. But the long and short of it is, Putnam Stable Value seeks capital preservation. So when everything is falling, you want to be somewhere where your money is the safest. Let's look at the futures. Okay, we're looking at the futures market. So President Trump comes on last night, says there's a travel ban for Europeans into the country. The markets did not like that. With that being the case, I'm not sure how many times the markets have stopped tonight, but once they hit minus 5% in pre-market, they hit a circuit breaker to keep them from losing a lot of money. Looks like small caps have stopped trading. Dow has stopped trading. S&P and NASDAQ, they might still be trading, but I'm not sure how many times they've stopped tonight, because the market's pretty much dropped 5% right after President Trump's speech last night. So with this being the case, I would not be surprised as soon as the markets open to see the Dow, S&P 500, and NASDAQ drop at least 7% at the open. So 7% at the open. If they fall another 2 or 3 days, we might be done falling at that point, because if they fall that much, you're probably looking at 7 to 10% each day. And that'll be about our target that we might want to think about getting back in. But I remember Goldman Sachs issued a warning saying that, hey, from our lowest level, we might see another 15% down. And that was like a couple of days ago. I'm not sure how I ran across that information, but that's what I ran across. I'm thinking another 20, maybe 30% from where we ended at yesterday might be a good spot to try to jump in. I'll keep you posted. Like, share, comment, and subscribe. Later.